This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Chris Judd and this is Talk Your Book, and today we're joined by John Forwood of Lowell Resources Fund. John, thanks very much for coming back on the show.
Chris, thanks for the opportunity to talk my book again.
Thank you. Now what stock did you want to get into today?
Yeah, it's an ASX listed stock called Blue Star Helium, which we've been invested in for a number of years.
And so if we just get the graph up on the screen, you can see it's had got some research coverage, it looks like, in September, October 21, around 12 months ago, raised some capital at 5.6 cents. And to me, it looks like a lot of the sort of explorer slash developer resource stocks that I'm in, where it's just sort of been forming a bit of a base after a downtrend and trending sideways for an extended period of time. I know you're not a big technical analysis man yourself, and neither am I, in fairness, so we might jump straight into the fundamentals. What's the helicopter view of BNL?
Yeah, look, going back to when we first invested, a bunch of oil and gas gurus, very strong technically with a lot of experience in the US, identified this helium field, which has been producing helium for a long time in the US, mainly under government ownership. And they identified that on the flanks of this field there was some really good helium showings, but didn't have a lot of data, and in particular they didn't have seismic, which is almost your most important tool when it comes to drilling for gas. And they didn't have seismic because the helium field is trapped by something called an evaporite, which is a carbonate sequence, and the seismic can't penetrate through that, so you can't see what the structure's like. So they're doing mapping on surface, but they really didn't know what was there. There was a few old wells with some high-grade helium reported out of them, but look, there was a risk there. So the risk was getting the permits to drill and then drilling in the right spot. Okay, we thought, yep, look, those two risks are something we're prepared to live with, and we invested, and they've actually mitigated those risks and successfully put them to bed over the last few years. So look, hats off to the company. They've done a fantastic job.
And US-based assets and incredibly high grades. So for a real mining minnow, there are a couple of nice starting points.
Yeah, indeed. So the Model Dome, which was the historical producer owned by the Bureau of Land Management, I believe, in the US, had grades of north of 7-8%, out of a reservoir which all the consultants and gurus describe as a beautiful reservoir. It's low pressure and high permeability, so you basically need less than the pressure of a bike tyre to release that gas, and it flows beautifully. So those grades, comparable to, say, the biggest producer in the world is Qatar Gas, and they produce high helium as a co-product with their methane gas, and their grades are about 0.7%, and we're talking 8%, sometimes even higher than that, in the some of the ground that Blue Star Helium's got. So what's that? That's an order of magnitude greater than what most helium is produced at.
So we might jump into the project specifics in a minute, but maybe it might be a good idea to start off with helium itself, and what are the industrial properties that helium's used for?
Yeah, so I don't know if people remember their periodic table from chemistry class at school, but hydrogen, helium, lithium, beryllium. So helium is the second element on the periodic table, which means it's the second lightest element, that we know. And that means it's really, volatile is not the right word, but it can escape really easily. If you've got an average sort of a seal on a pipe, it'll find its way through it and disappear. It doesn't just go into the atmosphere, it's off into outer space. So once you've released it, it's gone. But those properties, some of those chemical properties or physical properties that it has, are what makes it so special and unique. So everyone knows about helium in party balloons, But the biggest use is actually in making MRI medical scanning machines, which is obviously a sector that's growing a lot. Then another sector that's growing greatly is semiconductors. It's used in the manufacture of semiconductors. And then rocketry. And Elon Musk is shooting up rockets all the time. It's used to purge the engines and tanks for rockets. So while it's a fairly boutique commodity, it's actually got a huge number of really big growth end-use sectors.
And you mentioned Qatar before. Where does most of the helium supply come from?
Yeah, so Qatar is the biggest producer because it is, if not the biggest, one of the biggest gas producers, and as mentioned, has a very small quantity of helium that comes with its natural methane gas. Then next is the US, and the US is the biggest off-taker, so they're coming in quite close behind. But it's interesting to see that the BLM, the Bureau of Land Management, used to have a big stockpile of helium, and that disappeared in around 2019, 2020. Then there was a swap mechanism that the BLM were using. That's been taken off the market last year. So basically there's 15% of world production disappeared in 2022. And as a result, we've seen the price, some of the, it's not a transparent market, but some of the prices reported have just really skyrocketed.
And ballpark, what sort of changes have we seen in the prices over the last 12 months for helium?
Yeah, well, when we first got involved, we were, or maybe even only 12, 18 months ago, we were talking about $250 US an MCF. And now we're modelling at least $650 an MCF. And some of the prices reported are in the thousands.
Just difference depending on which geography you're selling into, is that?
Yeah, definitely. Yeah, so US being the biggest market, the Blue Star guys in Colorado are really well placed geographically. But also there's a difference in concentration. So if you go to something called 5 nines, which is a purity of 99.999%, you'll get $6,000 an MCF. If you have, say, 98% purity, then you'll probably get in the, at the moment, you'll probably get in the high hundreds, $600, $700 an MCF, which is still, we'll talk about the operating costs soon, I suppose, but it's still a fantastic margin if you can get those prices.
And you mentioned, so it's produced usually as a byproduct from natural gas, but the shale gas in the US doesn't produce any helium, is that correct?
That's correct, yeah. So as we know, there's been a big shift in the US to produce natural gas from shale gas, and that doesn't produce any helium. So while demand for methane natural gas is growing stronger and stronger, and the issues around Ukraine and Russian gas, etc., a lot of the new gas, shale gas, is not doesn't come with any helium. So that's another factor that's pushing the price up.
And so maybe let's dig into Blue Star Helium's Las Animas development plan and what that's saying more broadly.
Yeah, so one of the things we really like about it is it's low capex, and the formation that the helium is in is actually very shallow, 1,000 feet. So what's that, 300 metres? So to drill the wells to access that reservoir is very cheap, relatively. You know, sometimes, you know, for natural gas, if you're offshore in deep water, you know, in the Gulf of Mexico or something, it can be tens, if not hundreds of millions of dollars to develop a field. Think about the Northwest Shelf, that's billions of dollars. These guys, you know, they can just drive up, do the agreement with the landholder, poke down you know, they've got to use a proper gas rig with the blowout preventers, etc. But yeah, it's in the hundreds of thousands of dollars to drill these wells, and then hooking them up is to a gathering system, and a processing system is also very low cost as well. So it's.
And when you're saying low cost, to put it in perspective, the numbers they're sort of putting out in their presentations are sort of $2.9 million to turn on first production at the Voyager discovery. So for a $50 million market cap company, it's very doable, isn't it? I mean,
absolutely. They've got the cash in the bank now. They've got $6 odd million in the bank, Aussie dollars in the bank. They could do it with their cash in the bank, and they're talking about a timetable which would see first development in the second half of this year and first production in the second half of this year. A lot of that will be off balance sheet. So the 2.9 is what's Blue Star is estimating they'll have to pay for drilling the wells, the initial wells and the gathering system. But they're talking to a contractor who will provide the gas separation plant to separate the helium from the other gases. And then you basically stick it in a tanker truck and drive it and off to the customer. And
so you mentioned that midstream provider that would process the initial gas. How would that arrangement work in a practical sense? And would that be a fixed fee or would it be a percentage of revenue, or how do those sorts of arrangements usually work?
Look, that's sort of, I guess, I don't know the details of those contracts, but as I understand, it's a fixed, contract fee. It's not a percentage of revenue. And the contractor they're talking to has got like a dozen of these plants available for lease. And
they're just mobile plants that they can pick up.
Mobile plants, and as I understand, it's only a matter of days or weeks to install them. And I guess the contract would be a lease for periods of years. We're looking at the company's looking at probably at least 10-year field development in their initial Voyager project.
And Blue Star won't participate, it sounds like, in either downstream purification, get it up to that supremely high purity. It'll just be a case of trucking it out and driving it to the processing plants 150 k away.
Initially, that's definitely the plan, but the capex to actually go to that very high purity is not that great. It's in the tens of millions of dollars. So it's certainly within the reach of Blue Star, but they want to walk before they can run. They want to produce 98% helium before they go to that extra technical step.
And so they mentioned in Prezzo the modular processing facilities that they plan on using after their initial Voyager discovery processing. They talk about them being $10 million per module. Are those the sorts of modules that could produce the higher grade gas, or do they need something more expensive than that?
Yeah, indeed. So you can go to a liquefaction plant, for that sort of order of magnitude, and that would produce that high grade. We've seen one of their peer comp companies, which is listed in Canada, called Desert Mountain Energy, just go into production in the last month or so, and they built their plant for $10 odd million. Interestingly, it was solar powered.
And they're classed as green helium. I can't keep up with hydrogen. There's about 8 different colours, isn't there? There's green, there's black, there's
gold, there's brown.
I'm not sure how many colours of helium there are, but they're classed as green. I mean, does that improve likelihood of getting the various environmental approvals you need? And is it classed very differently to fracking, which I know in the US is a very political issue?
Yeah, so there's no fracking involved. It is green because the co-gases, as mentioned, most helium is produced in conjunction with methane, which is obviously a CO2 generating fossil fuel, whereas the coal gases, at least on Voyager, the first project, is dominantly nitrogen, and that's just in the air we breathe. So once they split the helium from the nitrogen, they'll just vent the nitrogen, and there's no carbon impact from that. There is a bit of CO2 produced as well, but on their second project, what they're talking about doing is, because there's more CO2 on that one, talking about potentially selling that into the beverage industry. So if you drink a can of Coke, the carbonation in the water is carbonated with CO2, and that's actually, there's demand for that in the US. So it's another revenue stream that they potentially can.
And would that be not overly material in terms of the revenue, but it would, in terms of greening up the project a bit, have some utility?
Yeah, I think so. I think I'm not sure exactly, but it'd sort of be an order of magnitude less in terms of revenue. But yeah, certainly instead of venting CO2, you'd like to find a home for it.
And so you mentioned market cap around $50 million. They had $6 million or so in cash last quarter. But if they produce second half of this calendar year, they might be touch and go if they can last that long without a raising. In terms of EBIT, have you done any back of envelope numbers on what that phase one could deliver for the company?
Yeah, so that $2.9 million of initial capex with ongoing capital, if say they drill one more well each year, because these wells, the production will decline about 1/3 every year, so you've got to keep drilling to access more gas. And using that $650 US and MCF price, we get EBITDA of somewhere in the order of 25 million US net to Blue Star. And yeah, obviously if you use higher prices, then that can go up.
That sounds really interesting. So maybe before we let you go, maybe tell us a little bit more about Lowell and where people can find you if they want more information.
Yeah, thanks, Chris. So Lowell's a listed investment trust, trades on ASX under the code LRT. We've been around for 20 years, we've been listed for 5, and we just focus on this sector, which is the junior exploration and development sector in commodities. And everything from precious metals, gold, right through to gas and helium. So yeah, we're looking for the 10 baggers. Yeah, hopefully.
So are we, John. So are we. Thanks, mate. Yeah. Thanks very much for coming on the show. Really enjoyed it.
Thanks for having me, Chris.
This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.